Well, those were all very negative terms that B of A used in the note. And, let's remember when the S&P was down 11% and the NASDAQ was down 23% from its peak, those were corrections that baked in a fair amount of negativity. So it's not as if the market has ignored the possibility that there could be a recession. And we know the market dropped 37% to March 24th of 2020 before we really saw the recession hitting because of COVID. And that was the point to buy. And I'm not suggesting that the market is all a buy, but certain stocks certainly were at a level that they were very attractively priced, down 30 to 70% in many cases. And you have to pick your spots. We know that the NASDAQ, on average over the last 50 sessions, has moved 1.7%, either up or down, during this period of time. That's just incredible volatility. So there are a lot of people worried about whether we're going to be in a recession. I had several clients ask me that yesterday. Are we now in a recession? We have 3.6% unemployment. It's hard to imagine that's a recessionary scenario today. But we're going to hear a lot over earnings season over the next few weeks, and we expect more volatility. And if stocks get hit hard, maybe that's a time to buy them and look for opportunities to perhaps take profits in some of the sectors that have worked incredibly well, such as energy or consumer staples, over the next few weeks.
Yeah, I mean, to Carrie's point, Jason, we have seen parts of the market really severely correct. And just in recent months, and you take a look at some of the sector moves just year to date, home builders are down 30%, semis are down 23%, small caps are down 20%, retail is down 20%. I mean, the list goes on and on. It's not like we haven't seen pain inflicted in the markets. It's just pockets of the market here. So what is the message that we're taking away in your view? I mean, have we adjusted for this new environment in which there is both balance sheet runoff more aggressively than thought, as well as rate hikes more aggressively than we thought?
Absolutely. I mean, all great points. And obviously, Melissa, there's a litany of concerns in terms of just the headwinds. Obviously, you started with Fed speak. Brainerd came out, obviously, a hawkish tone. Ukraine, obviously the crisis there, and obviously inflation. And we're going to get a lot of data next week, PPI numbers, CPI numbers, as well as retail sales, which will kind of really give us perspective on how the consumer is doing. Obviously, earnings will start next week, starting with the financials. So for me, and I don't know if this was mentioned earlier, but when we talk about inflation, some encouraging data that I saw this week, with the World Container Index, is obviously those prices are starting to moderate, coming down 3%, a little over 3% week over week. The other important data point I believe that's important to note is autos, used car autos, which we've talked about a lot during the depth of the pandemic and how pricing has surged in that arena. They have come down 3.9%. So, I still am cautious about this market, but I think there will be opportunities that you just alluded to, a lot of places which have really gotten beaten up and felt the pain. So I'm really looking forward to earnings next week, getting an idea of the state of the consumer and how we move forward going into the second quarter.